Y'all are probably thinking what we're going to talk about today. Not sports. Very little sports over the weekend. But we decided to spend the first half hour of the show talking about the Oscars. We know we got a lot of movie fans out there, so give a like to that. All kidding aside, who got their face ripped off by that rally on Friday? Or did you catch it? How about those imbalances? What's going to happen today? What's going to happen this week? Retail earnings season, Ryan Craver, 8:35. We need to talk to Michael Pachter about AppLovin. We're getting him on 9 a.m. It's a jam-packed Monday on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, team. Here we are, 58.50 late in the day on Friday. Knocking on the door, 6K up another 28 and a quarter handles, 59.91.50. Christian's going to find some resistance for us when he comes on. The buck, big pullback for the buck here. The buck is down 72 cents, 106.34. TLT giving back some of those gains from last week at a buck 14, 91.29. USO flat 75.37. GLD rallying with Bitcoin. I guess you need to own both. Up a buck 93 at 265.20. Trying to get back some of that move. I'm skipping SLV for Dennis. Bitcoin, I don't know. Why is that up today? $8,810 at 93,480. I know we're bringing on Triple D, and he has a lot of free time on his hands. I want to know what your favorite movie was.
Oh, gosh. Were the Oscars on last night? I didn't watch it at all. I knew they were talking about it, but I was watching hockey games. I had my hockey pool going, watching snow fall on my property, watching my kids throw up. It was awesome. That was my night. This has been. So I don't even know the Oscars. Was there any good movie? What was the best picture? Do we know?
Anor? Is that what it's called?
Or I never even heard.
Anor. Am I pronouncing that right? Yeah.
Christian doesn't know either. Did you watch the Oscars?
I watched a little bit. I watched the last portion where they talk about best actor, best actress, and so forth. But I'll tell you, I didn't know half the movies that they're talking about, and I was like, sometimes you watch it and you're like, oh, okay, if that's supposed to be a good movie, maybe I'll watch it. But I haven't even heard the majority of those movies. I heard
they just don't make movies.
I saw
like
the Bob Dylan movie. I thought that was great. But
yep.
Movies
oh my
just
gosh,
aren't as good as they used to be. They just aren't as good as they used to be. Like all the ideas, seem to always be taken from something else. Like I watch something and maybe it's just I'm getting older, but then I'm like, well, they stole that idea from this. They stole that idea from over there. Or, I just think like it's hard coming up with new ideas anymore because so much stuff's been done. Maybe AI is going to change that. Maybe AI is going to come with all these new ideas we've never thought of before. But what's AI mean for movie actors? There's a question for you because hell, if you can just AI everything, deep fake it all, why don't you just AI the dang movies and not hire any more actors? I mean, it can't be good for actors, can it?
Oh, the writers.
And then on the Oscars, are we going to give awards to the best computer systems that, this one, this AI? I don't know. This world's going to be different, man.
All right. How about that rally on Friday? I mean, end of the month, seasonality. I was kind of looking for a rally, but it was a really choppy day. And then we started to get going before the imbalances came out. And then those imbalances came out and there were no offers.
I think there was $5 or $6 billion on the close to buy, I think is what it was. I just thought buys across the board. I didn't add it up, but I think somebody said it was up to $6 billion. A big imbalance is $2 billion, so 3 times bigger than a normal close. There was ridiculous moves. I mean, the Qs straight up for the last 15 minutes just ripping higher. Tech stocks ripping higher. all stocks ripping higher on the close. Look at the S&P. I mean, it was at 12:30. We were in the gutter, making new lows. Looked like it's going to be a hellish February. 582, and then boom, literally in 3 hours, because those this closing imbalances also come out. They start getting those on the floor before 2
Earlier.
o'clock. So, I mean, they kind of got to feel it's going to be some buyers on the close, and then they're buying ahead of those buyers, and bang, we close up here. We get the Trump pump over the weekend, and what sell-off? The sell-off's gone. The fade trade works again. Buy the dips, sell the rips for eternity. Eternity. Christian, are you buying dips and selling rips, my son?
Well, they saved all the buying for the week in the last 10 minutes of the week, which was, yes, I mean, it was pretty crazy. We've seen some of these month ends go the opposite way. So, this was to me, it was a bit of a surprise that there was that much to buy. But hey, we're out of February. February was a very weak seasonal, especially the second half. It's very weak seasonal part of the year. So we're now in a little bit of a stronger, that weak seasonality is done. It gets a little bit different in March. I think the first week, just in terms of average seasonality, is supposed to be strong. Then it gets a little bit, dicey. I think the second week of March, and then the end of March is supposed to be strong, just in terms of average seasonality. So, was I out buying the dip? Not really. I did put on one trade. I put on an SPX call spread for this week, just to kind of take advantage of that seasonality and thinking that we were oversold. So thankfully, I did put that on midday on Friday. So that trade's working out for me.
I bought 3 stocks in the longer term account, which turns into the shorter term account, it seems like lately, because they just get these moves so much faster than you think. But basically swing trades. Getting back in my Micron again. Somebody was asking me to get back to the Micron. I said if it gets back down into the 90, I'm going to do it again. Lo and behold, well, it got back down to 90 again. It wasn't there for very long, but it was there for the open on Friday. So I picked up Micron. I'm already up, I don't know, like 5% or 4.5% in it here in one day. I bought Marvell. I think I talked about this one too, just being beat up. I mean, it's given back its entire last 3-month gains, coming into an area that it has, major support from before. I picked it up around 87. We're 93 this morning. I mean, these moves, you think like a 6-point move is going to take you a week or two. No, it takes you one day, one trading day. Also bought my Dell back. Remember, I had sold the Dell around 119. I sold 2/3 of the position. I rebought the stock that I had sold at the 119. Scalping, just playing the fade trade off the 100. Now, again, I don't know if I love the Dell because, the earnings themselves weren't that great, but I just had big support and, just picking some stocks up. And, if they get back up and they give you 7-10% moves, you're flipping out of it. I think that's what the market environment we're in. Pick up some stocks, some tech names that are darlings. They get a little pop back, 7-10%. I think you're booking those gains again. So, I mean, that's a question here for Christian now, and we should go to Bitcoin here because,
Hey, Dennis, before you do, and I know we talk about this ad nauseum, and I know these guys need the orders on the close. They need that closing print.
Yeah.
But man, if you got $6 billion to buy, or you got something to buy, I mean, where'd they get their signal? I just can't believe that it just all has to be done on that closing print. It just seems so inefficient if you're like a money manager or a trader. I mean, I just don't get it. I mean, is that because they need the closing print? Is that what it has to be based on?
I think they're just hedging out their options. They got open options trades a lot of times, and they're hedging those out. But on the end of the month, it's window dressing here too, where they're like, we want to get this higher. I think there's people who are intentionally trying to move the market higher to have a better looking February. That's called window dressing. So I think that happens too. And you combine all that and you get a lot of buys. But I mean, we had a rebalance, I believe, too. I don't remember what was rebalancing, but I think there was one. Again, Friday seems like an eternity ago to me.
Okay.
Back in the day when I traded institutionally, I was on an index trading desk, Delta One trading desk, and all of that stuff is tied to the close. I used to trade a ton of daily rebalances. This is back for the leveraged guys, and all of this stuff is tied to the close. Now it depends on your trading strategy in terms of like trading into the close. I mean, I used to start my orders right around 350 once I kind of had a sense of how much I was doing for the leveraged folks, and also the imbalances, because you got that information out. But all of this is tied to the close, especially for month end.
They have to have it. Okay.
Yeah.
All right. And then the other thing before we move on, and I know people talk about seasonality, right? And we've talked about it for years, and there's definitely correlations with the market, right? But you know what I think of seasonality? You know why?
Ooh, bold
Because
statement.
because it's being replaced.
What is replacing it? This is going to be good. I like this.
Trumpality.
Oh, yes, Trumpality. It is all about Trumpality. Let's give some props to our own Christian Fromhertz, who said this on Friday. And he says, Trump does not like the market going down. I remember you saying this, Christian. And you're like, if it continues to go down, he's eventually going to do something to prop it back up. Well, he wasn't talking the equity markets here. He was talking the crypto market over the weekend. But sure enough, Trump has saw the Bitcoin rally fizzle out. It's been a tough year. Basically a tough 2 months for crypto investors. Bitcoin's was over 100,000. Where did we get down to? Almost 75 or something?
The futures filled the gap. We talked about this. The futures got, under 80, Dennis.
Under 80. Okay.
Yeah.
And
could I just say one thing real quick before we go on? But I get that with the seasonality, but how could you argue that point when the seasonality was supposed to be weak in the second half of February, and that's exactly what we got?
I'm pretty sure he was joking, but
all right, well,
he wanted to just go into the Trumpality.
Okay, carry on.
I've always been a seasonality fan too here, Christian. Rob Friesen, one of my mentors at Bright Trading. Nobody knows seasonality better than him. He obviously, when you were at Bright Trading, would give you all the information on seasonality that you wanted. It's very important as traders to understand if we're in a seasonally strong or weak time for the market. I talked January effect so much. That's a seasonality trade.
Yep.
The January effect in itself. Leaders to laggards, laggards to leaders, where, stocks reverse because of tax consequences, obviously not wanting to book the gains at the end of the year and then coming in. So, yeah, so I'm going to just, go with Joel and say, I think you were joking there with saying seasonality.
I was.
It was okay.
I was.
But again, sometimes Joel's jokes are so serious that you're like, is he serious? Are we all on Trumpality here now? But yeah. So Christian, to go back to what you were talking about before we get into the Bitcoin stuff, you were going to talk about getting out of that seasonally weak period of February. March, April typically are stronger, correct?
Correct. Yeah.
Yeah, and then they go
that the end of March, the last couple of weeks of March and April are super strong.
And then they go sell in May and go away. And we've seen statistics that works sometimes, it doesn't work other times. I don't know how much I believe in the sell in May and go away theory there, but I do believe, that when you get a calendar turn, though, you get changes in dynamics. And we have definitely seen this year as the value trade over the growth trade. And the Bitcoin obviously has struggled here. So over the weekend, where obviously this Bitcoin is the opposite of a value trade because it's no value. It's just, it's all about, just story. But over the weekend, Trump comes out, defends the crypto markets, talks about a crypto reserve, tweets it out. And here you go, Bitcoin up 10% here overnight. Over the weekend. It's a huge move. It's a huge lift to the overall market because not only, do we lift Bitcoin, but it's like, oh, Trump is coming and defending these markets. Trump does care about the markets going higher. So even though it was the crypto market, his direct tweet, it's to your point, Christian, is that when the stock market starts going down, Trump doesn't like it. So it's going to be a hard 4 years for the bears to get really super bearish. Because if the market, to your point, you made this point on Friday, I just want to remake it. If the market really tanks, Trump's going to do whatever he can to prop the markets back up. If we get tariffs and the markets are tanking on it, he may back down. He really thinks of the market as as a way to gauge how good he's doing. And if the market starts tanking, he doesn't like it. We saw this with the last presidency as well. So it's hard to get super bearish with a Trump presidency here.
Okay, all right. We jumped around here with the seasonality. We talked about the close. Do we want to get to individual issues here, Dennis? You talked about some of the ones that you bought on Friday. I don't know if I'd rush out of them, Dennis. I mean, I know you're getting that gain, but I'd sure like to see you on some of these just kind of, let it breathe a little bit because a lot of people missed that move on Friday. There's going to be a lot of, and we don't have too much to upset the apple cart this week. We do have some manufacturing data coming in early. We started retail earnings season, right? And I think that's going to be important to gauge the strength of the consumer. We'll have Ryan Craver on at 8:35 to give us a preview of some of retail earnings season. But I mean, the rally is following through, and I really thought we were going to be down. We were down overnight, but let's see, work our way back up here into the 6,000 handle.
I think we got to have our eye on tomorrow, though. Like, I don't know if it's tomorrow, what time the tariffs are supposedly going in, but, tariffs are supposed to go in 25% for Canada, 25% for Mexico. I'm hearing 20% for China now. It was 10 at one time, but now they're saying it's 20. I mean, I think the market, again, people don't like it when I say this. They think the efficient market hypothesis is there, and they don't like it when I say, this is the dumbest market that I've ever seen, but I'm going to continue to reiterate it. This is the dumbest market that I've ever seen. So we have tariffs on the horizon, yet we're buying everything, So it's a binary event that's going to happen tomorrow. Do the tariffs actually go in? Because if they do, you got to think there's going to be a lot of stocks that get absolutely hammered on that. And some stocks are going to rally on that. Think about the stocks that can benefit from it. If the tariffs get kicked down another month, so, kick the can down the road another month like they did last time, well, then probably everything just rallies up near all-time highs again. So, I mean, it's all about, what the title of the show is, to tariff or not to tariff. That is the question. Do the tariffs actually go in? Is he bluffing? But it's going to be, I think he's all about tariffs. I think he's going to put them in this time. So that's why I'm more inclined to take gains, because I think the market starts to get nervous as we start going into tomorrow. So maybe it's not off the hop. Maybe you get some continuation. You get up near S&P like you get up near 6,000 here again, 600 on the SPY. I think you got to be booking profits into this because there's a lot of political risk here still. Christian, your thoughts?
I think that that's spot on. I mean, if you look at last week and how the performance was generated last week, it was buying the close and selling the open. Most of what we saw last week, despite that last hour on Friday, was basically just that. The market sold off through those sessions. Now, again, there's different things that are at play this week. It should be a stronger week, but I think that you still, with that overhang, and you're looking at futures up. I mean, I think it's kind of the same thing. I think that to your point about being a dumb or stupid market, take advantage of like what that market's giving you, and don't argue with it at the open. Put some money in your pocket.
I think so.
Because if you were really prudent last week, you could have basically done that every day and said, "Hey, I'm going to sell right around the open, and I'm going to watch to see how the day develops." And the majority of days last week, it didn't develop very well. Now, the one thing that I'm also wondering, my big question for this week, now that we're out of February in that week time, or supposedly week time in terms of seasonalities, what stocks are going to be in vogue? Because last week it was your lowest volatility areas of the market that did extremely well. Your insurance stocks, your healthcare stocks, your exchange stocks like ICE, for example. So MasterCard and Visa did really well. All the commonality with all the stocks that did very well last week is basically the theme was that these are very low volatility stocks. If you bring up the USMV ETF chart, Joel, you could see that ETF went out at new highs. So I'm not sure I want to buy after the move that some of these insurance stocks made, like an AIG on the close on Friday.
Crazy
I
move.
think you got to let them come in a little bit. But my main question is, what stocks are going to participate this week?
New segment. It's a new symbol from Christian every day. He has to come up with something that now, Dennis, if you told me you traded this a lot, then
USMV?
yeah.
I've traded it before. I don't trade it actively.
um, but well, if we want to go out and talk about the tariffs, he was talking about tariffs on lumber. And the lumber, this is the ETF that I have up on. I'm not sure if you have the lumber futures up there. I looked at it. I mean, it's just not moving. They talked about it. That's the latest tariff talk. Definitely not. All right, let's look. If you want to talk about value, and you want to talk about stocks that are not responding, how about these housing stocks? I mean, they did. What about them? Is this time to look at buying the dip in some of these housing stocks?
Well, maybe the market is being smarter here. I say it's the dumbest market ever, but I mean, you got input costs. If they're going to tariff lumber coming in, they're going to tariff a number of things coming in. It's not good for companies that use those products. I mean, think about Ford and GM, obviously with the autos. And it's not going to be good for them. But I mean, this is a whole other area that we haven't talked about here. Home builders need wood. So wood's going to come in and be tariffed. Well, that's not good for any of them. They use a lot of it. It's like 20% of 20 depends on the type of house, but 20 to 25% of the cost building a house, lumber. So that's significant. So I think that's something to think about. I think maybe the market is getting ahead of that a little bit. So maybe in this case, the market is not being dumb. Maybe it's just reading the tea leaves and saying, hey, we're going to tariff the hell out of some stuff. And I mean, value's done pretty well. And those home builders are value stocks. They have not participated at all. So maybe this is tariffs weighing these stocks down.
They're all the charts look almost identical.
Oh, Toll, Lennar,
Look at this.
DHI, KB Homes. They're all sitting near the lows.
there's
Sitting all
two-
like, yep.
I was going to say there's two stocks in that group that I've been watching, and I think it has more of a recessionary tone too. INVH, which reported earnings last week, Invitation Homes. Also, so look at that move towards the end of the week. Also AMH, which is American, I think it's American Homes for Rent. So there's a very much recessionary tone that's also taking place, I think, in the home builders. And, American Homes for Rent is a company out of DC, or excuse me, is around that area. And, so I think it's very interesting to kind of say, okay, the companies that make homes for rent are the only ones that are going up in the group. Just a different take on it.
Remember, and sometimes I just get stuck on a stock being kind of a barometer for the market of how interest rates, a lot of things. There was a stock that I talked about on Friday, and I really wanted to see if it could hold its gains. And there wasn't even a gap in it. I mean, it had a good earnings report. It gapped up, and then we talk about this. A gap fill, even on a while. I mean, I know the market sold off, but Rocket. I mean, it was higher a bunch of the time in the pre-market. It came down. It kissed the top of yesterday's range, so you don't even have to worry a gap. And it traded back over 14 and near the highs of the session. So, if we're worried about interest rates and we're worried about tariffs and worried about lumber and worried about all these things, I know the stock is significantly off its all-time high, but I mean, to me, way above its 50-day moving average. That keeps me out of the super bear camp, guys. Do you guys have any stocks like that or looking in? I mean, I switched it around.
We gave this counter arguments TLT trades. So we had TLT moving up significantly on Friday as well. Rocket earnings were fine, but I mean, you can put those two charts on each other. Don't look further than the TLT. Interest rate sensitive stock at the Maximus. That's Rocket. We have interest rate sensitive stocks. There's none more interest rate sensitive than RKT. None. The most interest rate sensitive stock you can get. So it's going to be directly correlated with TLT trading action. As obviously rates go down, going to be good. Rates go up, going to be bad. It's just the way it works. RKT, TLT selling off today Keep that in mind as well. TLT is moving more to a risk on, risk off thing, though.
Mhm.
So, where we were moving, before, where we're really worrying about rates and looking at rates and IWM and XBI all linking it, it's kind of like a risk off, risk on thing now, too, where we're seeing the TLT move in the opposite direction of equities. So, where equities were having a tough week until, the close, TLT was having a great week until, the overnight session when we get this, crypto rally and everything.
All right, we have some things making new all-time highs. Look at that. Look at the financials. XLF.
Lots of things. It's hard to be fully bearish here, and people want to be bearish. The media wants to be bearish. We've had this conversation here before too. I mean, media wants headlines. They want to hear about a coming recession. They want to hear about how everything's going to implode and these valuations and these overvalued stocks are just going to tank. Dan Nathan's playing every night for the big tank and the Teslas and all these overvalued, names here. So media loves a good story. But the story here hasn't been about bullishness. It hasn't been about bearishness. It's just been about choppiness. And I don't see that changing because, you're going to have tariffs maybe bringing down the market. Then you have Trump coming to defend the market and bringing it back up. And then the tariffs is going to be a deal and it's going to go higher. Oh, there's no deal and it's going to go down. There's your news headline predictions for the next 3 months, 4 months. Tariffs, no tariffs, deal, no deal. Market going to be all over the place. So that's why I'm in the camp of being a trader right now. Investing hat coming off. I don't think it's going to be a great investing year. I think it's going to be a fantastic trading year. Buy your dips, sell your rips, short your rips, buy your dips. I think this is the year for that. I'm loving it.
So Joel's bringing up a couple of these symbols. I mean, this is just kind of to Dennis's point about it's tough to be negative when you see something like European financials that are breaking out. I think we talked about this towards the end of last week. It's not a new all-time high in European financials, but as far as that ETF goes, I'm kind of just blown away at stocks like HSBC and Barclays, I think that's BCS, which have just gone ballistic to the upside. So, yeah, you look at these stocks and it's like, wait a minute, what's wrong with the market? To see European financials do this is quite remarkable.
It's going to be a very interesting year, and there's going to be separation. I don't think this is the year we're going to sell everything or buy everything. It's going to be about, identifying where the strength is going, where the money is moving to. Christian's giving you another area. I mean, European financials are not in the wrath here of, tariffs. We haven't really talked much about, he's talking about 10% over in Europe, but he hasn't really talked too much about that yet. So, I mean, they're not in the direct hit here.
Well, plus too, I think even if they do tariff Europe, how much does Europe get from the U.S. and can't they just diversify away? And I think that might be some of the play that's going on here is that, there's not, you don't have to worry about tariffs or as many tariffs, I guess, with Europe. And I think that's a little bit about what's going on. And also, the DAX isn't far from new highs too. The German index too. So again, it's like it's a very different year. International is crushing US so far this year. So and again, I wonder if that continues or if it's just a reversion to the mean. You could look at EWG, I think, but okay. That's one of the most interesting stories to me is how well international markets are doing comparatively to the US.
And really it's so contrary to what in what you're reading in the media and what you're seeing going on, with tariffs. We're going to take everybody down. We're going to be, we're just everything, USA, and everything's going to the opposite direction. But we got our guest coming on in a few months. And you know what we haven't talked about in a while? Dennis's favorite stock, Tesla.
Been my favorite stock for a while, but it's no longer my favorite stock. We know because I'm worried about the sales. But we have Morgan Stanley coming out this morning and absolutely defending Tesla. They're coming out, top pick reinstates Tesla. We know it's Adam Jonas. Reinstated Tesla with an overweight, $430 price target. Tesla shares are down nearly 30% year to date and on a clear buyer strike. We reinstate Tesla as our top pick in U.S. autos, with greater than 50% upside to our $430 price target. Our bull case is $800. Tesla deliveries could potentially, so 2025, this is interesting. Tesla 2025 deliveries could potentially decline year over year, creating an attractive entry point to our preferred embodied AI name. I mean, I don't disagree with, a lot of that, what was just said, because I think the long-term thesis in Tesla is still good. But I do think the numbers, the delivery numbers, are going to be horrible. I think they're going to be horrible short term. And Musk is kind of telling us that too, because on Twitter over the weekend, he was talking about, the long term. And he said again, long term, Tesla's going to be, could go up, he said tenfold in the next 5 years. He really likes it long term. But he isn't mentioning anything about the short term. Like, man, we're really killing it right now. You know why? Because they're getting slaughtered right now. There is a buyer's strike, and not only in the stock, but in the cars right now. So I don't know if that's priced in. I mean, maybe it is. Maybe we've come down enough that the expectations are just low enough that if the current numbers for next quarter, which is still a couple months away here now, but we get delivery numbers. I don't know if they're ready for it. I don't know if the market's ready to see, significant declines. I do believe it's been selling off because of the European numbers we've been getting. European registration significantly lower. So it's defended. I still have a small piece in the long-term portfolio. I'd love to get bigger here, but I'm very nervous that the market isn't ready for a huge decline in the current numbers of sales. And I think that's happened.
Christian, any technical Tesla comments?
I think my technical comment would be that it did stop right at the 200-day moving average to the downside. That's what I would be trading against for now. That 200-day moving average is right around like 278. The reason why I watch that is just because a lot of institutional traders watch the 200-day moving average. Retail traders too watch it, but I mean, it bounced right there on Friday. So that's what I would be watching for now for Tesla.
I'm just going to go to the monthly on this one and just like, what happens when it has like a bad month? Well, it had a bad month there. It had another bad month there. Had a bad month here. Had 2 more bad months. Here, bad, very choppy, 3 months down. Here, big 3 months down. So I don't know. It'd probably be pretty easy to get a green candle here out of, after last month. But just look at the historical pattern. Someone was asking in the chat for like a shorter term level. Like if you traded and you bought the dip, you could care less about it going to 400. I'll just do some technicals here. First of all, what you want to see, you got to get through that pre-market high at 304.42. I think a lot of that will be SPU dependent. And I think I like that area because of the daily high. No, it's way above from yesterday's high. Your next daily high, if somehow you can get through there and they really, they want to take this higher, 309 is your 3-day high. And now you have to use the top of yesterday's range as support at 293.88.
Also, Dan Ives coming out and defending Palantir. We want to talk these storage stocks, and we're going to get, obviously, our guest coming on here in a second here, too. But Palantir, $80 Friday, 87 here now. Dan Ives comes out defending the stock significantly as well. I'm just going to try to give you some commentary here. Reiterates his outperform, $120 price target. This is, obviously, Dan Ives from Wedbush. Palantir is helping lead the AI revolution into the use case phase as its AIP product. Moat is unmatched in our view. Palantir remains one of our top names to own in 2025. We believe the recent sell-off represents another opportunity, with Palantir generating unprecedented traction across both federal and commercial for its entire portfolio. So he's bullish. He's been bullish. Dan Ives always on the bullish train. Says the dip is to buy. I mean, you bounced. Joel, technical analyst, you bounced where you think you should bounce. We had 80 as resistance in December, twice. 80 as resistance in January. And then, we broke out and got up to the 125.
Fill the
where
gap.
Did we go down to? Right back to the 80. We bounce off old resistance, becomes new support. I like where it bounced.
Gap fill on this one. We'll see how much momentum it has. There's 3 highs in the same area. And there was a 93.62 high. I don't think you're going to get that today, but I'll go with one of Dennis's old tricks, and it's like an intermediate level. And prior to that high over 93, you had a pair of highs at 91.70. That's still $3 away. So I would use that as a short-term target. And I wonder what his target is on Dan's target on Palantir, because I know at one point it was trading way over the target, and they asked him about it. But
He's jacked
what do we
everything.
have this week? We have retail earnings kicking off, and who better to talk to about retail stocks than the elusive Ryan Craver? All right, there he is, one of the busiest guys on Wall Street. Ryan, are you enjoying this volatility?
Get out of here. The busiest guy on Wall Street, the elusive. Man, I got a lot of good picks to give you to get out of jail here. How are you guys?
Give us
doing
those good picks. What do you got for us, Ryan? What have you been working on over there?
There's some of the similar themes that we've been talking about for years. A lot of the same trends within retail have continued. So Walmart continues to tell a much better story than Target does. Target continues to struggle. I've said a couple of times on the show, I think it's due an activist shareholder play to get Brian out of the CEO spot there at Target. I think they'll continue to struggle. I think Walmart will continue to tell a good story. This recent trend trade down on Walmart, probably, if you don't have anything there now, might be worth a little bit of a bet. And then you've got our famous behemoth, Amazon, the toll booth of e-commerce. I think it's in a good position. They continue to dominate growth in e-commerce. As you know, they're shipping more than UPS and FedEx, so that continues to grow. They continue to earn more and more from the advertising side of the business. They just announced, a big site like Adidas.com. They're going to be fulfilling a lot of their buy with Prime, so the stickiness factors there. It's got too many pieces that are moving quite well, and they continue to be the dominant story. Beyond that, it's TJ Maxx and Costco. And those are kind of the 4 or 5 major names to pay attention to within retail that continue to gain the share. Everyone else is trading amongst themselves, and it's a bit of a shell game. So
Talk to me about Costco. This is something that I was thinking about, as my acronym, as a stock that had some potential to get hit this year. The reason is the valuation. I mean, I know they're opening up a lot more stores, but holy mackerel! I mean, can they continue to grow and keep those margins? So it's performed well, and I haven't put any hedges on it or anything. But I mean, does the valuation scare you in Costco?
yeah, so we've talked about this for a long time. We've had this valuation problem for a considerable period of time. With that said, they just continue to perform, right? So one of the most productive on a per square foot basis of any retailer in the world. The only time we ever saw this trade down valuation wise was early to mid 2022. Is it even at a more significant premium than historically? Yes, but if you're going to put money in retail, you gotta go with those that continue to gain the share. Costco continues to gain the share, continues to gain the traffic, and has that lovely sticky base in the membership base.
Ryan, we got a few companies reporting earnings this week. I want to start with Abercrombie and Fitch. They're going to report on Wednesday, and this stock has absolutely been killed in 2025. It started the year at 160. It's $100. So nobody's talking about this, but this thing has been rocked. Bar has got to be lower when the stock price goes down like that. But what are your thoughts on Abercrombie and Fitch going into the quarter?
Yeah, so it was hot for a while. Continues to remain relatively hot, but it doesn't have any story on the comp sales that are dramatically improved. It doesn't have any story of new store openings. So I would probably watch earnings and then decide after. I do think that it's a bit of a catching a falling knife right now, so I probably wouldn't take a bet unless it, is probably half of where it is today.
On. Next one, reporting tomorrow. Stock has been killed as well in the last month. We're talking about $64 down to 48. Are they really doing, like, are they falling off the cliff, the sales, because the stock went off the cliff, or is this just another opportunity to buy the dip and on holdings?
Yeah, I like to say a new brand loses its cool factor once you start seeing it sell in Costco. This one, roughly 3 quarters ago, we started selling in Costco.
Oh, didn't know that.
So I believe the cool factor for this and Hoka, HOKA, under the whole Deckers theme is definitely a little bit tired. I probably would watch earnings as well.
I mean, PE is 42 on this thing. I was just looking at the valuation as well. So, I mean, we know these high-priced retailers, when they start to lose a little bit of luster there, can come down quickly in price. So, definitely valuation was a little bit nosebleed there. It's come down some, but maybe not enough then, Ryan.
Exactly. Definitely not enough. I like to watch the brand groups that are buying brands that they believe they could either turn them cool again, or they have the ability to gain additional EBITDA by changing up their operations. Take a look at a company called Contour, Kontoor. They just bought a brand called Helly Hansen. I do think that they're going to monetize that asset in a much better way than what it historically was done.
You're
Great
talking
skiing
KTB.
company.
You're talking KTB?
Yeah.
Great, great skiing company.
Yep.
That they bought. Yep.
So they traded down quite a bit. I think watch that one. That's one that I would probably play longer term if you can get some stability in it.
Hey Ryan, just a question for you. Last week was obviously like a sell-off week, and XRT retail really got hit. What I tend to watch sometimes when when a whole group gets hit like that is what's outperforming or what's holding up. And I know we mentioned Costco already, which did pretty well. Walmart too. What about like a couple smaller names that I was watching too that stood out to me was Urban Outfitters, URBN,
Yep.
and Ralph Lauren, RL, seemed to do okay, but not as well as Urban Outfitters. What's going on with Urban Outfitters? Is that one that you look at?
Yeah, so Urban's playing a couple of interesting trends. They're playing the used clothing game because they no longer are growing their store count. I think they remain hot. They've got the foot traffic trends, unlike a lot of the other specialty retailers. I like the name. Would I be long the name? No, but I would definitely trade it if I think that I could get it at a reasonable price. Ralph Lauren, it still remains a relatively good name as well. They have similar trends in terms of traffic and their ability to monetize in e-commerce. So I do like that name as well. Again, I don't think that either of these have the long-term story. I think that they're seeing just some success right now. One other major retailer that does still have that long-term story that we really haven't talked about today much is TJX. TJX continues to grow its store footprint. It continues to sell product that the consumer is buying at a good price, and it's continuing to do it across the world. They're not just stuck within the U.S. like, say, a Target. So it's still got a good long-term story, in my opinion.
Ryan, I want to ask you about Ross Stores then, because TJX and Ross Stores, similar business model. Ross Stores is going to report tomorrow. The stock has been selling off into earnings as well. We were 155 start of the year. We're down at 140. We're actually 135 last week. Last quarter, Ross beat and popped up. Can we do the same thing here again on Ross? If TJX is doing well, I would think Ross is doing well too.
I think Ross will probably post a relatively good number. However, I think the slight premium on TJX is worth more than that of Ross. The third one in there is the Burlington stores. Burlington trades at even more of a premium than the other two. I say stay away. So I would go TJX.
Ryan, how are the pizza sales at Urban Outfitters?
The pizza sales.
Yeah, yeah.
You never know
That's
what
a
he's gonna do,
it's a
Joel. You never know what
long-standing
he's gonna do,
joke.
Ryan. You
That's a
never know what he's gonna
long-standing.
say.
You guys don't remember when they went into selling pizza?
No.
Go look it up. Okay, Ryan.
You got crickets on
Wait,
that
wait,
one,
wait, wait,
Joel.
wait, 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 Joel, we gotta do one random.
I got.
Uh,
Is it this stock? SMWB.
Similar web. So similar web. We
Yep.
talked about it probably 2 or 3 calls ago. This one, it's playing all the right themes, right? AI, the fact that it's all about intelligence and data. I just can't see how they are not acquired by someone larger. When we talked about it a ways ago, it was down in like the 7 and change. It went all the way up to about 17, and now it's back down to 9 because some of the comments on the Q4 call were a little dicey. I think the CEO scared the investor community a bit, but I think it's in a place where it's worth 750 million market cap. It should be acquired by someone larger. The usual suspects that would be interested in something like this, but it's essentially within our business a monopoly on Amazon shopping data. And it's also one of the big players within web analytics data to tell us where brands are selling, how they're gaining the traffic. So it's a huge analytics play. I think longer term,
Hey,
very
hey,
solid.
Hey Ryan, one more question that I have for you. I don't know if you track like monthly sales data or that type of thing on a whole. Are you seeing anything change? Like, is there possible like a weakening of the consumer? Anything revealing? Because people are starting to talk about, again, the R word comes up. I know that we've talked about that with a few guests too. Are you seeing anything change overall in the retail group?
Great question. So I think for the month of February, it was relatively weak versus our expectations. I definitely think the customer has been trading down. So some of our more premium brands have seen a trade down either to a lower line within what we sell. We have had to be much more promotional than we were last year. And then, of course, we have one less day in the month of February, right? Because last year was a leap year. This year's not. So I would probably echo what Jassy said on CNBC last week, Wednesday or Thursday, I believe it was. Definitely seeing a trading down by the consumer.
Thank you.
Okay, and just for those that are doubting me, I just want to show you this.
You gotta go. Pizza
Uh,
at Urban Outfit. It looks terrible.
that looks
No wonder
horrible.
they didn't keep doing it. That's the worst looking pizza I've ever seen in my life.
It
What
looks like
year is
frozen
that?
pizza.
Joel's mad at me, man. He had to pull that one out of left field. So I
What?
was like, what? What are you talking about? Joel,
Okay,
you're elusive. You're an elusive man.
one more
Wow.
for you. I gotta let you go. You're so good, Ryan. We
Feel
love
sick
having you
now.
on. China, Pinduoduo. What do you
Oh,
think?
yes.
Yeah.
Timu. I just don't see them stopping to fund to get more and more customers on the platform within the app stores. I don't see them stopping their funding anytime, regardless of what Trump says, whether de minimis is killed, whether their shipment tariffs are going to go up. It's they want to succeed in the U.S. Just as recent as 2 weeks ago, a lot of our major brands received an email from them telling them that there would be zero fees if they launched in Canada. So they're going to continue to try and push this thing, and they're going to try and spend as much as they need to in order to keep them tops in the App Store. I think what's also interesting is Amazon's competing play, which is called Amazon Haul, Haul. They have it's just been leaked by the information that they will be expanding that globally. So I think this, cheap thrills and product game is not going to stop anytime soon. Yes, it might get slightly more expensive because they don't have the free shipping and they have higher tariffs, but I think it's going to continue. I really do.
How about
Okay.
the SE? One more.
I
SC.
Yeah, I don't really have a view on it. I mean, I could
Baba.
look at
Baba.
Baba. Ask him Baba. We're finishing with Baba.
Baba, we talked about for years, and I think I even said, let's go get it years ago. Unfortunately, I didn't hold it, and it finally got that pop. They got the AI story. They've got everything around the e-commerce story already locked, signed, sealed, delivered. I think it's a great name, but I've been saying that for so long. I don't know if this momentum continues, unfortunately.
All right, Ryan. I know you're looking to see if you can tease me about my Peloton workouts, but man, I haven't been on that thing in years. I just it correlates with the stock price. Ryan Craver, Commerce Canal, a retail expert, joining us here on Pre-Market Prep. Thanks a lot, Ryan.
Have a great week, gents.
Thanks, Ryan.
That was fun. That was a fun interview.
I can't believe that pizza, man. Like, that was so sick. I can't get that view out of it. I mean, my kids have both had the flu all weekend, and now you'll show me that picture. I feel nauseous as well. Just even
it doesn't look like it's been a shock that they discontinued that, Joel.
Yeah. It was like McDonald's pizza. Remember McDonald's pizza too? It was terrible as well. McDonald's has tried everything: tacos, pizza.
Speaking
the stock dropped 8% on the day that it bought it on November 7th, 2015.
Christian, you were going to say something.
It just looked like I was talking about the skiing. It looks like the pizza that you get when you're going in and getting lunch at this
ski resort.
You're going skiing.
You heated it for the 10th time there.
It looks like the pizza they served in my junior high school cafeteria.
Yeah, that takes you back to those days. Okay, we better get away from the pizza.
Can I just say one thing, just to echo what Ryan was saying about that he's seeing some weakness in retailers. One trade that you could that I was just kind of thinking about is like, hey, you could kind of do this like long and short too. Like you can go long. One of the a couple of names that he mentioned that are outperforming, like Amazon, Costco, those TJX that are outperforming, and go short the retail ETF versus that. I mean, that's a nice little pair trade to do.
It would have been worked forever being long Amazon and short the XRT. I probably would have been just an awesome trade for years and years and years. I still love Amazon. I mean, you can't argue with where it even is and from valuation perspective there. So I'm hoping to get back down near 200. I actually did pick some up and then I flipped it out because it went from like 204 to like 220. It felt like in a heartbeat. Come back down here again. I think you're still in a trader's environment where you're taking the quick 5, 6, 7%, hits that you're getting. But I think long term, I'm still sticking with my core position in Amazon, and I think I'd be a buyer if this thing got near 200. So.
All right. Do we do one of any analyst ratings? Okta after the close. We really haven't talked earnings much. Okta consolidating here, maybe a little bit lower bar after hitting $100 couple weeks ago, coming down to 90. Any thoughts on Okta? How's its peers done?
I mean, cybersecurity stocks done very well overall. CrowdStrike, obviously, since the debacle, and then made new all-time highs. Palo Alto is not far off from all-time highs as well. Zscaler is another one. It hasn't done as well as the other ones, kind of just been meandering and hanging out. But Okta, I don't know. I'm mixed on this one because I don't think the bar is necessarily low. But, it could be one that could, really beat here too, because when you look at where it was in 2021, 22, it was $250. I mean, the stock, even though it's had a recent run, is still way off from where it was. So I'm torn on this one. I throw it to Christian.
Okta, and then we also have CrowdStrike that reports the day after that. So I don't know on Okta. I think that's been a tougher one. I'm just bringing up the earnings history, which kind of gives me a guide of what they've been up to. They were up. They went up 5% last quarter. The previous 2 quarters they were down pretty heavily. So I think that's a tough one. It's kind of like a coin flip for me, like what they're going to do in earnings. Not that I have a crystal ball anyway. CrowdStrike reports the day after that, which I think is going to be a very big, will be a bigger report for the group. CrowdStrike last quarter went down 4% on that earnings day. The previous 5 quarters, CrowdStrike went up. So that's definitely one I'm going to be watching. And then also, if you want to look at one name that I keep seeing in the headlines a little bit, and that which I like, which is Checkpoint Software, which is also, I believe, a little bit in this, does a little bit of cyber stuff too. But they got another upgrade this morning.
Yeah.
Who was it this morning? I think it was Piper. But that's the third upgrade that they've gotten since they reported earnings. And what I like about this company is it's not expensive, and that's what the market seems to like. Piper, another upgrade at Piper touts momentum. Let's see what the price target is that they put on this. Price target to 260 from 220. So even though that name is done reporting earnings, I'm looking for outperformance in Checkpoint Software.
I mean, we haven't done the ratings here. Is there any other ratings that stand out to you here this morning, Christian? Because you know, we know Mondays and Tuesdays are usually typically very busy analyst days here. So I'm just kind of looking through.
Chipotle got an upgrade this morning.
Yeah, that one's interesting. Upgrade to overweight from Morgan Stanley as well. CMG stock that has just been kind of getting hit, slow and steady, just not, you know. So this is kind of a contrarian upgrade, which are always interesting. Up to 55. Is it time to buy Chipotle?
You know what? It's never got out from under the shadow of that guy leaving. You know, I mean, it's had some rallies, and wow, it did get back up to 66. When did that Brian Nickel leave? That must have been this day. He must have left back in August, right? That was the day he left. It
It
had to
hit
be.
down like 47 or 48 that day.
Yeah, that's it. I mean, it did have a recovery that day, but I mean, I always look at that. I mean, these two stocks will always be intertwined in my mind. Starbucks, right? With the change. Hey, they're getting rid of some of those drinks that take like 14 minutes to make. So that's a positive thing for Starbucks. Do we have any good tickers in the chat to cover?
Yeah, let's go. Ticker time. Ticker time. We got to get we'll have Josh make something. Ticker time. So give us some tickers. What do you want to talk? You got 4 minutes here. We're out of earnings season, so it gives us more time here as well. Give us
Are
the
we
first ticker
finally out of
wins.
earnings season? Does this officially
Never ends. Never ends. Let's go Pfizer. Let's go value stock. And you know, it's been perking up here a little bit. I bought more Pfizer recently. So it's just kind of hanging out 26 to 27. I think if the market goes into defense mode, Pfizer is interesting here. Nice dividend while you wait, 6.5% as well. I don't know. If your time horizon's long, I think Pfizer eventually will figure it out.
Boy, oh boy, oh boy. Get
Meta?
above. Yeah, go ahead on this one. This one's a tough one.
Or grab another ticker. Intel. We haven't talked to Intel.
We talk Intel. Go ahead.
Yeah, well, big news here this morning. So Intel is one of your big movers here this morning. It looks like NVIDIA and Broadcom are testing chips on Intel manufacturing process. That's what the story is from this morning. And Intel, which is giving back a lot of that gain that it got, is popping back here this morning. So it's been a fade trade too, popping back up 6%. I'd say guilty until proven innocent for me. I'm more of a sell the rip kind of person than buy the rip.
5-point move, right? 27.55, 22.64. That makes the math pretty easy. Right around the $25 area. If you got above it in the pre-market, but if this is going to be a continuation rally here, let's hold $25 in Intel. That's what I'm looking at in Intel, and then let's throw one more in there because we got a special guest coming on at 9 o'clock to discuss a lot of hot stocks. So the final stock of the day, Dennis, I'll let you pick it.
We'll do NVIDIA because as NVIDIA goes, the tech market goes overall. And I want to throw it to Christian here before Christian leaves because we know Christian's got to go just after 9. We really had a snapback rally on Friday in NVIDIA. It's down here this morning. Probably, you know, maybe the Intel story's not helping it here either. But thoughts here, Christian, on NVIDIA?
I think it's an important stock to watch. I agree with you because it affects so many companies, and I think it was really affecting the market last week too, especially that dive that it took on Thursday. So I don't really know what to do with it here. I actually, for the first time in a long time, I don't own any. But I would be watching 119 to see if that level holds. That's right around where it made the low in February. So that's basically what I would watch. But man, this stock is really range bound for now. I think that we're in, as I think Joel likes to use this term, consolidation station.
Yeah, it's been that way for a while. It did get a pop earlier. I don't know if that was the Robin Hood Prince at 125.77. But I said it had some relative strength ahead of the report. Well, relative weakness today. It's not even at yesterday's high. So if you're looking for payday here in NVIDIA, you got to get back over 125, 125.09, and that was right with the market, 124.92. So there is a hurdle for NVIDIA past those earnings. So, okay, right on time here, 9 o'clock. Let's bring on our second guest of the day. All right, there he is, calm, cool, and collected. Michael Pachter, Managing Director at Wedbush Securities, covering all the fun stuff: entertainment software, entertainment retail, social internet, and e-commerce. Michael, how you doing today?
I'm good. Thanks for having me. Good to see you guys.
Okay, so we got to start out with the stock short reports. I know you love short reports. They test your ability to analyze a stock. And I asked you about this stock last week, and boy, you put together a note that it would probably take me 6 months to a year if I ever could write it. But just talk about your years on Wall Street, your experience with short sellers, the immediate impact here on AppLovin, and what investors should be paying attention to.
Yeah, sure. AppLovin is, I think, more a victim of its rapid rise than anything that it's doing wrong. So, when a stock goes from 10 to 90, and then that took about 2 years, and then from 90 to high 400s, which took about a year, I think shorts, antenna pop up and they say there must be something we can hate about this company. I'm totally fine if anybody ever questioned any of the stocks I cover on valuation. But the problem, I think, with AppLovin for investors is that virtually nobody understands what they do. And I say that, and I don't say it lightly. You pointed out I wrote a note in defense of the short report. It's the second note I've written in the last month defending them against short reports. There have now been 4. And my competitors combined have written 0 notes. So the truth is we didn't see 20 downgrades. So people still like the stock. They're just incapable of writing anything to defend it against the shorts. And that's because the shorts are exploiting that fact that nobody gets it. So anything they say is kind of easy to just accept at face value. Here's the truth. The market for advertising inside mobile games is about $35 to $40 billion. That's the potential. And that is user acquisition spending. So you're spending money inside a game to advertise to a person playing the game and try to sell them another game. You're trying to get them to download that free-to-play game, and then your hope is once they download it, they might start spending money. That market 5 years ago was probably 30 billion, and only 6 billion of the 30 was ever spent inside mobile games. The other 24 billion was spent on Facebook and Google primarily, and then little dribs and drabs on other internet and some conventional media. Now that market has risen to about probably closer to 40 than 30, and about half of that is spent inside mobile games. And why? Because Apple made it hard for Facebook to compete. Apple started something a couple of years ago called IDFA, Identification for Advertisers. They cut off the ability for advertisers to follow a player when he was reading the New York Times or shopping on Amazon or doing a Google search and then went in to play a game. You used to be able to follow them around on their phone, and you can't anymore. Google cut that off as well. So when that got cut off, what happened? Facebook's ads became really ineffective. Facebook ad network. They couldn't track you outside of Facebook because they didn't have the data. AppLovin filled that gap. They were able to figure out what you're doing when you're playing mobile games because they have data on so many gamers, literally billions of interactions a day. So AppLovin, enhanced its algorithm to figure out what you're doing. It worked. And the proof that it worked is their market share went up. The ad spend shifted from Facebook into mobile games. AppLovin is capturing more than half of all ads in mobile games, probably 60%, and more than half of all advertising spent on user acquisition shifted to mobile games. So AppLovin is at this, convergence of all these different spending habits right where they are, and that's been perfect. That's like Nvidia making chips when people need to mine Bitcoin or need to, do AI. They just happen to be in the right place at the right time with the right product. So they're crushing it. The short reports, for some odd reason, all of them played what's called hyper casual games. And I'll give you the classic example of that, Words with Friends. There's nothing to buy in that game. You can't spend money in Words with Friends. You can't cheat because your friend wouldn't play with you. So you can't buy letters. You can only play, and you might buy something that helps you make a solution out of the letters you have. But hyper casual games are ad supported. They don't, now by ad supported, I don't mean they're advertising other games to you. They're advertising SoFi Bank and Red Bull and AARP if you're me. They're advertising stuff that just to people who are educated and play Words with Friends. All 4 short reports focused on hyper casual games and that ad market. That is 5% of total ad spend. 5% of that 40 billion. So they're focusing on the wrong sector. Does AppLovin deliver those ads? Sure they do. Who cares? One of the short reports, a woman named Lauren Bialik, she wrote up how she saw ads for other games made by the same developer. Well, go figure. In hyper casual, the monetization is get you to watch ads. So how do they keep you watching ads? They get you to switch from one of their games to another of their games to another of their games, keep you engaged. Have you guys ever watched NBC or ABC or CBS? Guess what? They advertise their own TV shows too. They want to keep you engaged. HBO does it too. They want to keep you engaged. So the shorts all missed the boat on that. And then the one that really, really got me was one of the more recent ones, I think it was Culper, made an allegation that AppLovin delivers sex ads to underage girls, which, where's the proof? Obviously, they didn't list a single one. They just said, we saw them. So I will tell you that I have inadvertently landed on a porn site before. My firm's name is Wedbush. If you type in Wedbush, it's a porn site. Accidentally, it really is, I promise. Anyway, I accidentally hit a porn site, maybe not accidentally, but I did. And they have sex ads. Go figure. Porn sites have sex ads. AppLovin doesn't deliver them. So that one, I think, is what got the company. The company, after I wrote my response, my defense, came out with a press release saying this is abjectly untrue. We don't target minors and we don't deliver sex ads. The targeting of minors allegation, no lie that minors play mobile games. Of course they do. There's all sorts of protections to keep firms from advertising to them, and those are actually imposed at the iOS and Android level, and they're followed. So sure, do kids occasionally see ads? Yes. What are the ads for? Other games, other games and Red Bull. They don't see ads for porn. So the whole set of short reports was just focusing on things that don't matter at all. And so I wrote up a point-by-point refutal. I don't know what the word is. Refutal. I don't know what the word is. I refuted them. Rebuttal. I don't know what that word is. Anyway.
Refuddle.
Company defending themselves over the weekend here too, increasing their buyback authorization. It looks like by $500 million here. This happened Friday night, and the stock is popping back 6% here. So company defending themselves here too, obviously saying, hey, we think our stock is cheap. Do you think stock's cheap at this point in time?
Yeah, I have a $615 target, $615 or $625. The trick here is, when you look at like a mature, big profitable company. So, look at Netflix or somebody that you don't think is growing very fast. You're willing to pay 15, 20 times EBITDA. 20 is a lot. 20 times EBITDA essentially is a 5% free cash flow yield. So that's about as high as it goes. And our target on these guys is 40. So we're definitely valuing them at 2x what you would value in Netflix or Amazon at. or Microsoft. And is it worth twice as much? Well, it is if these dollars keep migrating away from social media networks, Facebook and Google ad networks, to in-game. And to be honest with you, I think more than half of that 40 billion spend is going to end up in game. I think that's the most effective advertisement. You cannot argue that a person playing a mobile game is interested in playing other mobile games. It's harder to say a person, what I'm looking at Facebook, is interested in playing mobile games. So much more effective to advertise in games. And the big initiative for AppLovin is what they call e-commerce. Again, really poorly understood. Remember what I said about a user acquisition of a game? What do you get a person to do when they play your game? They have to download it. They have to actually click on the App Store and download the game as an app. What AppLovin's doing with e-commerce is getting you to download the Taco Bell app. And that's e-commerce. And when you download the Taco Bell app, you end up with the Taco Bell app right on your phone. And notice that little one there? I have a free burrito waiting in my cart. That pops up and it drives you crazy. You see that little ad and you're like, I've got to order Taco Bell. The acquired customer for Taco Bell is worth just as much as the acquired customer for Empires and Puzzles or Match Factory, because he's got a lifetime value. He's going to spend $100 at Taco Bell a year. So they want that guy. So that solution, I think, is brilliant. Now, do they have a defensible niche there where no one else can copy that? No, they don't know who eats Taco Bell any better than anybody else, but they're first mover. So I can see e-commerce filling in the growth gap as they approach saturation of user acquisition spend in games, because they're going to acquire different kinds of users for e-commerce. They're going to acquire Taco Bell eaters or McDonald's lovers or B of A, customers. And if they can do that successfully, I think they grow for another 4, 5, or 6 years. So is it worth double the valuation metric of Microsoft? Yes, because they're growing way more than twice as fast.
Michael, when you were on a little while ago, back in November, you said Roblox is one of your top picks, RBLX. I actually bought the stock just because you've helped me out before, over the years you've come on the show. So I bought RBLX. PK in our chat says he bought on your recommendation there too. You still like RBLX?
I do. The stock got hit on earnings, and it's kind of sad. And I think I'm sure I contributed to it. I've been comparing them to AppLovin, saying that they have that kind of growth as well, and their growth is less from users than it is from becoming a platform for other games. So, think of iOS as a platform. You don't care what game you're playing on your iPhone, but in the background, you're playing it on your iPhone. Roblox can be that for other games. So you're just going to log into the Roblox platform and then start launching other games from there. That's the big opportunity for them. The second big opportunity for them is they're finally figuring out advertising. They have literally 400 million monthly active users, and 80% of the hours of engagement that they have, and they're literally at something like 60 billion hours a month. Those hours don't monetize. So if they start monetizing 30 billion hours a month of engagement just by delivering one ad per hour, they're going to make hundreds of millions of dollars in ad revenue. That's the kind of upside I see in the stock, and they're intent upon doing it. I think they're making progress toward doing it. They just haven't told us yet what the progress is. The stock dropped on earnings because all they did was reiterate that they're going to keep growing 20% a year. And they said, yep, we did it last quarter, 24, and we're going to grow 20% this year. And that wasn't enough for people. People wanted to grow faster than 20%. In fairness to the people who sold the stock off, maybe it's fully valued if they only grow 20% a year. But I think there's upside to that. And I think investors are just looking for them to say, yes, we did it. My bias about the company is they're going to say 20 and deliver 24 for forever. And the longer that goes, people are going to start realizing that they're sandbagging and it's not going to drop on earnings any longer. So I like it here a lot.
What's your price target?
Gosh, I want to say 90. I have to look it up. I apologize. Something higher than.
All right, I want to ask you about a stock that made a big move off, I believe, Disney News, and I just, I just wonder, like, what you're at. You're an analyst. You're just coming back from your 2 week vacation in Hawaii at the end of December, and you have Fubo. You're covering Fubo, and it makes an announcement about it's something with Disney, and it, I don't know, over doubles, triples, quadruples in 2 days. Goes over $6. I mean, is your phone, just cell phone, text phone, just ringing off the hook? I mean, those moves to me are just such a overreactions, and as you can see, a major overreaction. The company just had earnings. Give us your take on those 2 points on Fubo.
Yeah, I mean the okay, so it's worth 7, and I can get you there pretty easy. It's not worth 20 yet, but it's trading at 3, so 7 is a nice upside from here. I can give you math that will get you to $5.50 a share with a really light multiple. The trick here is that Fubo was struggling to compete with big guys like YouTube TV and Hulu Plus Live TV, and they were lagging badly. I mean, those other guys have like 5, 6 million to 10 million customers, and Fubo has 1.5. So the trick in this industry is that you charge about what your content costs, and but just slightly less. You make like $5 a month per customer, and that $5 covers your G&A. And once you hit break even, then every new customer you make $5. I mean, that's their model. And they were just not growing fast enough to cover their costs. They actually got to positive free cash flow in the most recent quarter, and a really tiny loss. I think they lost under less than $9 million. So they're fine. They're actually at break even right now with 1.5 million customers, and that's about right. We always thought that number was 1.516. The combination with Hulu takes them from 1.5 million customers to over 6. And Hulu has a much broader product offering that cements the relationship that people are worried about Fubo having with all the broadcast networks, because Hulu obviously is owned by Disney. So they're going to get ABC, and they're going to get that whole ABC suite of content. And Hulu's got long-term contracts for the other guys, for CBS and Fox and NBC. So I think that was the relief rally when they merged with Hulu. It clearly gives them scale. From their presentation, they flat out said Hulu is already cash flow positive and profitable. So if you merge the two, Hulu acquires scale. Essentially, the cost is you just wipe out the Fubo management layer, and I don't think you will, but Fubo takes over. But I think that you wipe out G&A for one company, and you essentially have synergy there. And then the bigger synergy, the broader synergy, is that Fubo's focus is on sports channels, so that regional sports networks like the Madison Square Garden network, where you get the Knicks, or I don't know what the Tigers network is called where you are, Joel, but they have one, and we have the Dodgers broadcast network, giving users, customers, the ability to watch regional sports networks and subscribe. You can actually segment that down to the local market. Fubo could do that. The other thing is Fubo doesn't offer standalone sports programming. You've got to buy the greater cable bundle, but they can now go to all Hulu Plus Live TV customers and offer a scaled down sports bundle. So if you can add sports to your existing Hulu subscription for $10 or $20 or $5, whatever you're looking for, that's incremental customers at incremental profit. And that's why the market got excited. The question is just how big are the synergies? They said in their combination presentation that it was pretty material. If you just buy into the numbers that they gave in that presentation when they announced the deal in January, you come up with, at a modest multiple, $5.50 a share, at a very slightly aggressive multiple, 7. And that's why the stock popped to those levels. It's pulled back. I like it here. The only risk, I think, to the stock going up is that the deal doesn't go through. And Disney pays $130 million breakup fee if the deal doesn't go through, which is good for Fubo. Bottom line, though, is Disney wants the deal to go through, because Disney doesn't want to manage this business. So Disney is much happier taking a substantial ownership interest in the combined company 70%, I think it is, and then letting Fubo run the show, and then Disney can just eventually exit if they choose to as the business grows. So I like it a lot.
Grand Theft Auto.
Ah,
TTWO. I mean, I don't follow this a whole lot. Seems like it's been coming out for a long time. Are they going to get it out in this year? I mean, the market is really anticipating it being a steal. And also I'm looking at this compared to EA. Talk about the GTA launch for Take-Two Interactive.
yeah, it's coming. The thing I find really fascinating is that 4 months ago they said GTA was coming and the stock popped, and then they didn't say anything again the rest of the year, and the stock drifted lower. And then this past quarter, when they reported, they said GTA is coming, and the stock popped again. They said exactly the same words. I pulled the two press releases. It will come in the fall of 2025. The last time they announced a GTA title and it didn't come on time was 2007. They announced that it was coming in November of 2007, and it came in April of 2008. It slipped by 6 months. The next time was 2011, and they didn't miss. They just announced the game was coming, and they didn't date it, and people assumed it was 2012, and they never dated it, and it came out in 2013. This time they announced it formally in December of 2023, so a year and 3 months ago, and they said 2025 that day, and now they've repeated it twice in earnings calls. So the earnings calls have said fall of 25. It's coming this fall. They wouldn't say it if it weren't done. I have a friend who I won't name because I don't want her to be compromised, who has done a casting call to do voice work in the game. I don't know if she's gotten the job. I actually don't want to talk to her and get her fired. But they don't cast voice actors until the last several months before the game comes out. That's the last thing you do, is do all the voice work at the very end of the game, because the game has to be done before you write the script to transition between levels. You just don't waste your time with that 5 years earlier. So it's coming this year. What does that mean? Well, I think consensus is in the $8 earnings range, maybe 10. Stock's trading at 200, 210, 213. So, it's already fairly richly valued, except if you think they're going to make more than $10 a share. And they only have 175 million shares, 179 million shares. So, every 170 million is another dollar. When you're talking about a game that's going to sell, 50, 100 million units, and you start thinking about the potential for them to charge more than $70, like what would happen if they charged $100? And the first 30 million units, they made an extra 30 million of profit. Oh, wait a minute, there's $5 or $6 a share. Like, there's plenty of ways to make more money. And the one I think is the best, and again, let's see if they do this. I don't want to say, let's see if they figure it out. They know this. I just don't know if they'll do it. Is if they integrate Grand Theft Auto Online, which is about a 400 million a year business they have, ongoing, just play Grand Theft Auto free to play on your PC mostly, or console. If they integrate that with the new game, because Call of Duty did that. They have something called Call of Duty Warzone, and they have another mobile game called Call of Duty Mobile, go figure. They integrated those with the premium version, and the first year they did it, the premium version sales went up 40%. They sold an extra 10 million copies of the $70 Call of Duty. So if Take-Two does the same thing with GTA Online, do they sell an extra 10, 20 million units there? Do we see the combined GTA Online and GTA sales go up by 500 million more? Yes, you will. So I'm confident they're going to do all that. The real question is just how much profit, and is it crazy to think they could make $15 a share for the next 2 or 3 years? No. Now, again, does the stock go much above 215? It probably goes to 300 if people really think they're going to make $15 a share. I don't know the answer. I'm not in a position to raise my estimates until the company tells me they're going to do what I just suggested, but I think they understand it. I think they intend to do it. They just haven't bothered to tell us yet.
Michael, we thank you so much for coming on. We've had you on for an extended period of time, and we have barely scratched the surface on the stocks that you cover. So, well, I know it's early out there for you. We really appreciate it. We're going to dial you up again real soon. Michael Pachter, Managing Director over there at Wedbush Research, joining us on Pre-Market Prep. Michael, we'll dial you up, as I said, again real soon. Thank you.
Thanks, guys. Bye-bye.
Okay, Triple D. I mean, we're really keeping you over time here. Anything you want to add before you bolt here for the open? You got to get those orders in.
So NASDAQ imbalances just came out. I don't normally stay on this long, so they're always interesting to give you those. Apple's week here. Apple's been moving opposite to the market. Like we have been seeing this, not on Friday because everything just ripped up on the thing, but I wouldn't be surprised. Like Apple, wicked moves on Friday. Open low, then high, and close near the highs. It's actually down here today when everything else is up, but we know it's kind of been moving opposite to the overall market. Tesla's still showing a lot of strength, obviously, on the Morgan Stanley being the top pick. I don't know. It's a hard market to chase in here, though. I feel if you're coming in here buying this open now, you're chasing it because we were just at, we just rallied 130 S&P points here in like 4 trading hours of actual open market because we were at noon, we were at 582, and now we're 596. So I feel like your major resistance up here at 600, maybe got maybe 20 handles upside here with a lot of potential downside, and tariffs are coming tomorrow. So I think it's sick. Ring the register still. I'd be taking the profits if you got them.
Okay. All right. Extended version here of pre-market prep. And I believe we're going to go down and get a word from the floor with Jonathan Corpina tomorrow from Meridian Equity Partners, covering it all here on pre-market prep. Folks, thanks for staying with us on this extended podcast. We'll talk to you guys tomorrow morning.